Give me just a moment here. All right, welcome back, everyone. Today we have Melanie. She's from the IRS and she happens to be in Omaha, Nebraska. She's going to talk to us about the taxpayer advocate services. And feel free to ask any questions as she present. Or I don't know what your preference is,
A-
Melanie.
After, please.
So, okay, after the presentation, please, you can also um, type your notes in the chat box, and then after the presentation, she will be able to take your questions. Without further ado, I will let you um, start your presentation, Melanie.
Thank you, Deborah. So yes, my name's Melanie Overall. I am the local taxpayer advocate for Nebraska and actually currently for New Mexico as well for 6 months or so. So welcome all of you. Today I'm going to share with you who we are at the Taxpayer Advocate Service. We'll talk to you about what we can do to help you if you have issues with federal tax matters, and also some helpful tips as you're getting ready to file or have filed. So, and you'll have to bear with me. This is a laptop I don't normally do presentations on, so alrighty then. So this wonderful person that you see right here, her name is Miss Erin Collins. She has been our national taxpayer advocate since 2020 and the voice of the taxpayer within the IRS and before Congress. She takes and represents Taz in front of the congressional folks and shares our annual report to Congress, which I'll get into a little bit later on, what that is and why it's important. So, about who we are. So, TAS provides a free service to all eligible taxpayers. The free service is available to individual taxpayers, businesses, exempt organizations, and authorized third parties. There is no income limitations for our assistance. The law IRC 7803, Parent C, Parent 2, Parent A, gotta love IRCs, identifies required functions of the Office of the Taxpayer Advocate. And they are, as listed here, to assist taxpayers in resolving problems with the Internal Revenue Service, identify areas in which taxpayers have problems in dealing with the Internal Revenue Service, to the extent possible, propose changes in the administrative practices of the Internal Revenue Service to mitigate problems and identify potential legislative changes which may be appropriate to mitigate such problems. TAS, of course, does all of this, and we take these responsibilities very seriously. We'll discuss just how we do these things, what we call case advocacy, systemic advocacy, and by working directly with the IRS for administrative changes and Congress for legislative changes. And so, by law, TAS is required to have at least one local taxpayer advocate in each state. However, we currently have more than one in the larger states, such as California, Texas, and New York. Because populations shift over time and different taxpayer issues emerge, TAS does periodically revisit the geographic locations and allocate staffing. So, about TAS and what we do. Um, so the main thing, we protect taxpayers' rights by striving that all taxpayers are treated fairly and that they understand and know their rights as outlined in the Taxpayer Bill of Rights, which I'll get into in just a minute. We help all taxpayers, not just individuals, but businesses as well. where a system or procedure has either failed to operate as intended or efforts have failed to resolve the problem or dispute within the IRS. If you qualify for help, your advocate will be with you at every turn and assist you with everything possible to get resolutions. So that makes us different than the typical customer service line that you call to get help, or the practitioner line that you call to get help at the IRS. So when you come into our office and you meet criteria, um, we stay with you through the entire process, whether it's a few weeks, few months, or longer, which we hope it would not be. But that depends on the type of case and, what is needed. So, all right. And like I was speaking of before, the Taxpayer Bill of Rights. So IRC, the Internal Revenue Code, provides taxpayers with specific rights. The Taxpayer Bill of Rights groups these rights into 10 fundamental rights. IRC 7803, Parent A, Parent 3. IRS employees are responsible also for being familiar with these and following these rights. The 10 rights, I just named them. We won't go into them. But you can find them at the taxpayer advocate.irs.gov /taxpayer.rights, just FYI. And I'll also be getting a PDF of this presentation to Deborah afterwards so you guys can have it. But the 10 rights, right to be informed, right to quality service, right to pay no more than the correct amount of tax, the right to challenge the IRS's position and be heard, the right to appeal an IRS decision in an independent forum, the right to finality, the right to privacy, the right to retain representation, and the right to a fair and just tax system. So I don't know if you knew that you had a Taxpayer Bill of Rights. A lot of taxpayers don't realize that there's actually this Bill of Rights that protects you when dealing with the IRS. But there you have it. And that's what we're here to do, is also make sure those rights are protected. The annual report to Congress, that's what I was mentioning before, that the National Taxpayer Advocate, currently Ms. Erin Collins, presents to Congress. So she's also statutorily required to submit 2 reports to Congress each year. An annual report due December 31st and an objectives report due June 30th. The NTA, or National Taxpayer Advocate, delivers these reports to the Senate Finance Committee and the House Committee on Ways and Means. She does this with no prior review or comment from the IRS. So this is coming strictly from TAS, Taxpayer Advocate Service. So the annual report to Congress includes an analysis of the 10 most serious problems encountered by taxpayers, as well as legislative and administrative recommendations for solving those problems, and a discussion of the year's 10 most frequently litigated federal tax issues. So what's really important to know is that not only does TAS recognize throughout the years we're working with taxpayers and their issues, we're taking that information that we're getting, the different kinds of errors the IRS is making, or the different roadblocks that's coming up, and we compile that as Taxpayer Advocate Service into this report to Congress. But we're not only just complaining about it, we're also providing them a supporting document called the Purple Book that has the legislation written by the Taxpayer Advocate, kind of like their group of counsel, and the law is written, they write the law where it can just go into a bill. So not only are we recognizing, hey, there's this issue over here, but hey, Mr. Congressman, you can just slide this right into your bill and you can correct it. But, sometimes they do, sometimes they don't. All right. And so how can we help you guys, the small business taxpayers? So TAS wants to reach out to you guys and help you meet your filing requirements, share resources for information and tax return preparation, and make sure those returns are accurate. So let's see. So this is a vast topic, and we could talk for a long time about it, of course. However, let's limit our focus to those areas that every business should know. and the things that we often see that maybe catch up a small business owner that's maybe new to things. Record keeping. We're going to discuss the importance of proper record keeping, classification of your workers, making sure that you're classifying them either as an employee versus contractor makes a huge difference. Paying taxes, specifically employment taxes. This is a huge area that can be the largest pitfall of all. We'll discuss a little bit about the best ways to ensure you're paying your taxes timely and in the right way. And we'll also discuss considerations when selecting a tax professional. So if you're not completing it yourself, when you put your trust in someone else to complete your taxes for you. Okay. So these are the different types of small businesses. And they are required to file different forms with the IRS and are responsible for paying different types of taxes. So I'm going to move you guys, like I said, not used to having this computer, so I have to move you guys over here. So the sole proprietor, they'll file an income tax form for themselves, possibly, well, most likely they should, a 1040, self-employment tax, Schedule SE. They would claim in it, or 1040 ES with estimated taxes, and the employment taxes forms 940, 941, 944, or 943, whichever one of those fits the criteria. A partnership is usually a 1065 for the annual return, and for the employment taxes again, a 940, 941, 944, or 943. A partner in the partnership files their 1040, their SE, Schedule SE with their 1040, and their estimated tax at 1040 ES. A corporation, income tax C for their 1120 or their 1120S. Estimated tax 1120W, and that's a C Corp only. Employment taxes, again, 940, 941, 944, or 943, depending on, I believe, how many employees you have. That's where that breakout comes for those forms. And then S Corp shareholder, the 1040 Schedule E in the form 1040 ES. So, move you guys back over here. Thank you for your patience with me. All right. So, the importance of good record keeping. So, as a small business, you may have many different types of returns that are due, as we just discussed, and types of deductions based on the type of business. As a very busy business owner, which I know you guys are, putting a user-friendly, less time-consuming system in place sooner rather than later will save you time and money. You may need to substantiate income and deductions. Good record keeping can assist you in preparing your financial records, keeping track of property and deductions, and so much more. Good records can also assist you in knowing exactly where to target funding and reducing expenditures to optimize profit. Righty. So record keeping for a small business. Per the IRS, you may use any type of system that works for you and your business to maintain proper records. In a few rare instances, the law does dictate the type of record-keeping system you put in place. Consider utilizing resources such as other small business owners, accountants, and low-income taxpayer clinics. I apologize for the dog in the background if you can hear that. A good system for a small business will require little training and allow you to quickly scan and catalog expenses and receipts in order to properly keep track of them. And many accounting firms may offer administrative assistance to train and make recommendations to office staff in small businesses. You want to consider the time or staffing you have to devote to this. A good hiring system or a good hiring service to compile records may save you time and money later. You may, and they state, you may be very good at whatever your business is, but maybe not that great of an accountant. So it's best to have a specialized person for that. It'll save you a lot of headache later. All right. All right. What types of records should be maintained? And I want to say, this is very important, and it does go into it, but I just want to stop and say, if you are audited by the IRS, having your records available, easy accessible, and put together in an orderly fashion is going to save everybody time. I always like to tell folks, provide to the IRS whatever it is you provide to your accountant to come to that number, and you should be good. So just a little rule of thought. And it's going to kind of go over that here in a minute, but just wanted to put that out there. So what types of records? Business owners need records to support purchases, sales, payroll, and other transactions generated in your business. Support for business deductions should be kept on a routine basis, generally daily, but at least weekly. Should provide adequate information that shows an exact amount of income expense. Can be electronically kept or in written format. I would say that electronically kept is your best bet. We've moved away from paper, and you're better off to be able to electronically send those documents. I mean, if you are still, with the paper, that's fine too, but it's probably a faster if you can get it to them in a spreadsheet or some kind of electronic document. Should be overseen or accessible to at least one other person for purposes of continuity. Should be based on invoices, receipts, account statements, and other business papers, and should be organized for easy retrieval. In the absence of adequate books and records to reflect income and expenses, bank statements and collect and canceled checks may be used to reconstruct income. The best opportunity to report income and expenses is when you file your return based on good supporting documents and it's timely filed. Next slide. So I'm going to move you guys over again. So how long to keep records for? So for the assessment statute, for the tax you owe is generally 3 years from the date you file the return or the due date if you do not file. The assessment statute for tax on income you do not report in 6 years if it's more than 25% of the gross income shown on the return or is attributable to foreign financial assets and is more than $5,000. The refund limitation statute is 3 years from the due date of the return or 2 years from the date you pay the tax, whichever is later. And the period for filing a claim for overpayment resulting from a bad debt deduction is 7 years from when the return was due. So the reason why these statute dates are important is you can come in realizing that, hey, I should have received a larger refund. But if it's past that 3 years from the due date of the return or 2 years from the date you pay the tax, then you are not able to receive that refund because it's past the statute date. So it's important as you guys are filing and you want to amend your returns possibly to keep that in mind as well. And then for all these reasons, the general rule of thumb is to retain records for 6 years. Shoot. You guys again. Okay. The responsibility, the burden of proof, the responsibility lies on you guys pretty much for proving what you have put on your tax returns, right? Even if you have your return prepared, either your personal return or your business return prepared by someone else, ultimately the burden of proof and justification is on you. Some people go, but my preparer did it, but you either signed the return or you gave the preparer permission to sign the return on your behalf, and so ultimately it's up to you. So the responsibility to substantiate entries, deductions, and statements made on your tax return is known as the burden of proof. You must be able to prove certain elements of expenses to deduct them. A lack of knowledge will not be an excuse if you're called to substantiate income, expenses, or credits. So not having the knowledge, saying you didn't know, is not is not good enough, basically. That's why you want to make sure you're in the know when you're filing your taxes. You have a preparer that you trust, and just being aware of what with your business, what types of expenses are allowed, what kinds of deductions are allowed, and that kind of thing. Just if you don't know, irs.gov has lots of great resources, which I will go over here in a little bit, but there's lots of online resources to help you guys. So let me see if I'm missing anything on that. Um, So be aware of which deductions are allowable and which aren't. These deductions do change from year to year, and with each Congress. So we do have a new Congress. So who knows, what that's going to look like as far as deductions. So you want to keep an eye on that. Congress is the ones that make the law, not the IRS. They enforce it. The most reliable source for deductibility of expenses is through your CPA, attorney, or enrolled agent, as these individuals are required to keep abreast of changes in the tax law. Be certain all your deductions can be supported before signing your return. Okay. We spend a bit of time on record keeping. So here's some more record keeping tips. I wonder why we spend time on it. It's a good rule of thumb for even your individual taxes as well, but specifically when you're claiming deductions such as what you would for a business. So keep those gross receipts in a separate bank account from your personal bank account. It's best not to use business inventory for your own personal purposes. Do not pay personal expenses with business gross receipts. Pay personal expenses from your personal bank account. And for corporations, it's expected you will pay yourself a salary, write a check from the business account, and then deposit it into your personal account. You want to keep these things separate. Okay, next. Okay. Why file and pay employment taxes? Well, many employers make the mistake of only paying the net payroll, the portion that the employee receives. This has been the downfall of many small business owners. When making payroll, the employer is responsible for their portion of the payroll taxes and the employee's portion of the payroll taxes. And failure to submit either of these amounts to the IRS can result in significant penalties. All right. So the IRS has the Electronic Federal Tax Payment System, otherwise EFTPS, available to all businesses. The Electronic Federal Tax Payment System, or EFTPS, must be used to make federal tax deposits. A 10% penalty will be assessed if EFTPS is not used when required. Businesses are pre-enrolled when issued a new employer identification number, and you can see publication 4275 for more information on that. And businesses can also enroll at https://www.eftps.gov/. Businesses can make same-day deposits with a wire transfer. So you can make a same-day deposit with a wire transfer. So, and then using the EFTPS is the most efficient way to ensure timely payment and receipt of federal tax deposits. It also helps you avoid penalties, and we will be discussing some penalties that you guys can incur as a small business, and one of those trust fund recovery penalty. And that is on the next slide. So the trust fund recovery penalty is a penalty equal to 100% of the tax withheld from the employee's wages, salaries, or salary, sorry. The TFRP penalties may be assessed against any person who is responsible for collecting or paying withheld income and employment taxes, or for paying collected excise taxes and willfully fails to collect or pay them. That's kind of a big one. So then we have, sorry. So who is a responsible person for the payment of these trust fund sorry, it's very, rewind. So a responsible person is a person or a group of people who has the duty to perform and the power to direct the collecting, accounting, and paying of trust fund taxes. There we go. This person may be an officer or an employee of a corporation, a member or employee of a partnership, an LLC member, a corporate director or shareholder, a member of a board of trustees or a nonprofit organization, another person with authority and control over funds to direct their disbursement, another corporation or third-party payer, a payroll service provider or a PSP, or responsible parties within a PSP, a professional employment organization or a PEO, or responsible parties within that PEO, or responsible parties within a common law employer, a client of the PSP or the PEO. So, what is willfulness? For willfulness to exist, the responsible person must have been or should have been aware of the outstanding taxes and either intentionally disregarded the law or was plainly indifferent to its requirements. No evil intent or bad motive is required. So the one such example of that is for an employer that withholds the federal withholding from their employees, but then does not pay the government that withholding, right? So you knew enough to withhold it from your employees, but then you didn't take that extra step. So that would be considered a type of willfulness. So just FYI. Okay. And how to avoid it? Well, you can avoid the TFRP by making sure that all employment taxes are collected, accounted for, and paid to the IRS when required. Make your tax deposits and payments on time. Additional information on employment taxes can be found in Pub 15, the Employer's Tax Guide, and the Form 941 Employer's Quarterly Federal Tax Return in the instructions of that. Right? Selecting a tax professional. There are various types of return preparers, including certified public accountants, enrolled agents, attorneys, and many others who don't have professional credentials. You expect your preparer to be skilled in tax return preparation and to accurately file your taxes. You trust him or her with your most personal information. They know about your marriage, your income, your children, and your social security numbers, and the details of your financial life. Most tax return preparers provide outstanding and professional tax service. However, each year, some taxpayers are hurt financially because they choose the wrong tax return preparer. And be sure to check out our tips for choosing a tax preparer and how to avoid unethical ghost return preparers. So we do have that on our website that you can find if you go to irs.gov and even choose Taxpayer Advocate Service, and you can get to our link. But there'll be more of those links later. But so selecting a tax professional, check the preparer's qualifications, check the preparer's history, ask about service fees. One of the red flags that we've seen when helping taxpayers is you want someone that charges a flat fee. Sometimes it's even a flat fee per form. You don't want someone to charge a percentage of the refund because more times than not, that's probably a red flag that they're going to be looking for extra ways to save you money. And in the end, it's going to be extra ways to cause you some headache and not save you any money at all. That's just my own personal advice there and what I've seen through my 7 years. I guess I didn't give you my history either of how long. I'll fill you in on that too. I just kind of said my name and rolled with it, but I've got some history with the IRS and with TAS. So make sure you ask about service fees. Ask them to e-file. I think most forms are e-fileable now. Make sure the preparer is available. So you don't really want to go to somebody that's going to be closed for, more than half the year after they do the filing, and then provide records and receipts to your tax professional, or they ask for it. So don't have someone tell you, no, it's okay. I know about how much that your type of business, oh yeah, you have about this much. No, you provide them the documentation. And like I was saying, this is a list, and I I will provide this in a PDF for Deborah to pass out to you guys. But publication 1, Know Your Rights as a Taxpayer. Publication 17, your federal income tax. Publication 334 is your tax guide for small business. 542, corporations. 583, starting a business and keeping records. And 5369, the gig economy and your taxes and things to know. Okay. So, and here we are going to go to some resources. IRS.gov has got great resources, and usually if you put in a key phrase, it'll take you, in the search engine, it'll take you to what you're looking for. But there's some great small business tax workshop videos too, I want to say. That will walk you through federal taxes in your new business, Schedule C and small business taxes, filing and paying taxes electronically, those things that's listed here. But they've really worked hard to make it a user-friendly and a great place for you to be able to help yourself getting those resources that you need for that new business. When to come to us. So when to come to Taz. So in general, contact Taz when you're experiencing some financial difficulty, emergency, or hardship, and the IRS needs to move faster than it usually does to under normal circumstances for normal procedures. In so if you're say, you're facing levies on your accounts. Hopefully you've come to us before then or been able to handle whatever situation brought you to that situation. But in those kinds of cases, we can help with the stopping of the levy or at least working with the IRS on a payment plan or even what caused the balance due to begin with. So um, if you're unable to, but first you have to try to work with the IRS go through their normal channels. But if they haven't responded or responded by the date that's promised, you can check your eligibility at taxpayeradvocate.irs.gov. And there's Ken Taz Help Me With My Tax Issue. So there is a little if and then uh, system that you can go through to check and see if you do meet our eligibility requirements. And how to contact us. So you can find your local taxpayer advocate office on taxpayeradvocate.irs.gov. We are in Omaha for those Nebraska folks. You can fax or phone the local taxpayer advocate office. Those phone numbers are listed on Pub 1546, or the National Taxpayer Advocate Case Intake Line. You can call that number, and talk to an intake specialist to see if you meet criteria, and they can make a case. You can also download the Form 911 to request for taxpayer advocate service assistance from irs.gov. And okay, so what to expect when working with us. So as we mentioned earlier, Taz's mission is to advocate on the behalf of the taxpayer, on the behalf of you guys. So in general, you'll be contacted within depends on the severity of the hardship. So usually it's within a week or two that you'll be contacted. Usually at intake, they'll give you a better idea of the time frame based on how large the inventory is and your hardship. Greater hardship, faster that you'll, of course, get assistance. You'll be given the name and contact information for your case advocate, and who will stay with you, like I mentioned earlier, until your issue's resolved. And that person will also be your point of contact until resolution as well. When the case advocate contacts you, they'll attempt to clarify the issue and give you an estimated completion date based on the time that the IRS is resolving similar issues for us, and that can change. Be advised, though, like I said, this is an estimate, and it depends on case-by-case factors. It depends on things such as your response for requests for information. Likely, the case advocate will ask you guys for what the IRS is looking for. We work as a mediator, basically, between you guys and the IRS. So we can look at your account, but we can't make any adjustments to it. We can look at the notes that the IRS has in the system, but we can't make any determinations. But we've worked with all sorts of cases and all sorts of types. So, and we have their manuals and our guides to help you guys figure out what it is they're looking for. Once we receive the documentation from you guys, we request the IRS to review it and make a determination. Um, if they make the determination and we agree with it, it's based on law, then we'll give you a call and let you know that, hey, they're going to accept it. And we try not to give you an exact, well, we can't really give you an exact resolution date at that point. We have to monitor your account and make sure the IRS does input the changes or allow whatever changes was previously input. When your account has updated, your case advocate will call you and let you know that it's resolved and give you either the refund information, or if you still owe a balance due, give you the BAL due information and with the different types of payment options at your disposal. So you'll also be provided with a clear and complete explanation of what was done, and with to remedy or resolve the problem on the case as well. So, all right, if you want to know more, so you can visit us at taxpayeradvocate.irs.gov. There's also a Spanish version too at es.taxpayeradvocate.irs.gov. There is the roadmap, which is very interesting. I encourage you guys to check that one out. It lets you see how many different places your tax return could be touched as it's going through the process and the different parts of the agency. And it could explain why it's slowed down at certain points, but it also tells you where your return would be going next if you are in the middle of an audit. So it's pretty interesting and handy. So there is a taxpayer advocate newsletter and a blog from the NTA that, I encourage you guys to maybe check out too, and you get updated information about those tax laws as they're changing, as we're in the times that we're in. And she'll definitely keep you guys updated with her blog. So, and that is all I have for you guys. So, as far as individual case questions, I maybe, or account questions, I can take your information and we can get back to you with a case advocate or an intake advocate. But and I'm happy to do that. In fact, uh, Deborah can share my email address with you guys too. I don't mind that at all too. So I don't want to spend time today talking about individual account questions. I don't currently have that time or my computer that I can access that up. So, but anything other than that, some general questions I can help you guys with, maybe. I'll try. I'll get you the answers if I don't have it now.
Oh, thank you so much, Melanie, for that presentation.
You're
We
welcome.
truly appreciate it. Does anyone have any questions?
Oh,
I see Bless.
yes. Hi, Blaze.
Can you unmute yourself? Let me.
Okay, hi. I wanted to ask you if you have come to situations where you have disagreed with the IRS. I mean, like really disagreed with them.
Right. So when we disagree with the IRS, we have law behind us that's telling us we're not just disagreeing because we really like you and we
Right.
want you to get your money. We disagree because we have which we do, don't you worry. But our disagreement would be that they have an IRC they're not looking at or an IRM that they're not reading. So as a taxpayer advocate, I have the ability to elevate an issue. So the examiner, say it's an audit issue, and you've provided all of the documentation that they've asked for thus far. And we can, as the case advocate or the case advocate manager, can look at it and go, yep, looks right. This is what they wanted. This is what they have. This is what it says over here that they need. So then we can elevate it, and I can elevate it to their manager. And if the manager still concurs with their employee, then I can then do what's called a taxpayer advocate or taxpayer assistance order. And that's where I elevate it to like the director of AM or the accounts management or the director of collections. And then they have to take and look at it closer using, our analysts. And I'll have analysts on our side or technical advisors on our side, also looking over our recommendation with tax law. And it's kind of like we're like the team, the home team. We got all this, we've got all that good stuff behind us as we go forward. So I hope that answered your question. So and there's also
Yeah.
the appeals process also is there for us too, possibly while we're pushing, it's sometimes we'll also ask you to start your appeals process over here. There, so TAS is an independent part of the IRS, so is appeals. So we were mandated by Congress to be able to come in and help taxpayers navigate the waters of the IRS. So we are also looking for those things that maybe alternate documents that you can provide that they would take, or some piece of the very long notice you received. There could be one line in there that could make all the difference, but because of how they write them, it's a little hard for folks to get or understand what they're saying. Or maybe there's a publication that we need to look at that the IRS didn't even realize applied to your issue. So we have a whole technical section behind us. We have attorney advisors in TAS. So we're very well suited to fight back. Do we always win those? Like I said, sometimes it ends up having to go to appeals, but we usually don't pick a fight that we don't feel like we can win when it goes to that level.
Okay. Thank you.
Nice question. Thank you, sir.
Question?
And if you think of other questions after the fact, please, I'm very happy to answer them, and just, send me an email, and I'd be happy to. So, but you guys have been a wonderful audience.
Thank you so much. If we don't have any other questions, I would just wish you an excellent week, and we'll see you back next week, Monday.
And
Thank
I'd
you,
love,
Melanie.
and if you guys would have me, so take care.